All right, get ready to deep dive into the world of Disney. And I'm not talking about Mickey Mouse and fairy tales this time. We're taking a closer look at their financial report for fiscal year 2024, the one that just came out on November 14th. And let me tell you, it's a wild ride. We've got those blockbuster hits like, Inside Out 2 from Pixar
Yeah.
and Deadpool and Wolverine from Marvel, but we've also got like some big question marks hanging over their streaming strategy and what's going to happen with ESPN.
Yeah. It's super interesting. Disney is obviously still a huge player, a dominant force in entertainment, right? But things are changing so fast these days. And this report really gives us a glimpse into how they're adapting, or at least, trying to adapt.
Totally. So let's start with the basics. Overall, Disney's revenue went up, but it's not as simple as just like more money, more magic, right? What's the real story behind these numbers?
Well, at first glance, things look pretty good. Their revenue for the fourth quarter jumped by 6% to hit $22.6 billion. And if you look at the entire fiscal year, revenue climbed to a massive $91.4 billion. That's a 3% increase. But things get a little more complicated when you dig into a metric called income before taxes.
Hold on. Income before taxes.
Yeah.
For those of us who don't spend all day on Wall Street, what does that even mean?
Basically, it's a measure of profitability. It tells you how much money the company actually made before they have to pay taxes. So it's a pretty key indicator of how healthy a company is, financially speaking. And for Disney, well, while their full-year income before taxes shot up by a crazy 59% to $7.6 billion, the fourth quarter actually saw a 6% decline, down to $0.9 billion.
This is kind of like a mixed bag then. Is this a sign that the magic is fading or just like a temporary blip?
It's tough to say for sure this early on, but it definitely raises some questions. Revenue's important, obviously, but it's only one part of the story. Profitability is what matters most in the long run. That's what keeps a company going.
Right. So like just bringing in tons of money isn't enough if they're not actually turning a profit. So where are the bright spots? Where are the areas where Disney's really crushing it?
Well, their entertainment segment had a pretty dramatic turnaround,
Yeah.
especially in the fourth quarter. Their operating income, which is another way of looking at profitability, but for a specific part of the business, it soared to $1.1 billion. That's a massive increase, like $0.8 billion more compared to the same time last year.
Wow. That's huge. What drove that? Was it all those big box office hits?
I mean, blockbusters like Inside Out 2 and Deadpool and Wolverine were definitely a factor. But there's more to it than just that. Their direct-to-consumer advertising revenue, the money they make from ads on their streaming platforms, that surged by 14% in Q4.
Yeah.
And that helped bring in a total operating income of $253 million for their direct-to-consumer business, which includes, all their streaming services.
Streaming. Speaking of which, the streaming wars are like more intense than ever. Everyone wants a piece of that pie. So how's Disney Plus doing in this battle royale?
Disney Plus is still a top contender, no doubt. Their core subscriptions, not counting Disney Plus Hotstar, climbed to over 120 million, adding 4.4 million subscribers in just the last quarter.
So they're still getting ground, but I have a feeling there's a but coming here.
You got it. So they're still adding subscribers overall, but they're actually predicting a little dip, a small decline in those Disney Plus core subscribers for the first quarter of 2025.
Oh, okay. So maybe a little bump in the road ahead. Before we dig into what that means for their strategy, let's rewind back to those box office wins. Inside Out 2 and Deadpool and Wolverine weren't just, hits with the critics. They were absolute moneymakers.
Totally. Those films raked in a whopping $316 million in operating income for the content, sales, licensing, and other category during that fourth quarter, which really shows you the power of those big franchises, those beloved characters and stories that Disney owns. They draw in huge audiences, and that translates into some serious revenue.
It's like the Disney magic formula in action, right? Turning nostalgia and storytelling into pure box office gold. But it sounds like not every segment is as sparkly as those blockbusters. What's going on with their sports division, especially ESPN?
Yeah, that's one area where they're facing some headwinds. Their sports segment saw a $6.1 billion drop in operating income in Q4, ending up at $9 billion.
Oof. That's got to sting. Are people just not as into sports anymore, or is there something else going on?
It's definitely more complicated than just a simple decline in interest. So while the overall segment took a hit, domestic ESPN advertising revenue actually went up by a healthy 7% compared to last year's fourth quarter.
So it's not just about fewer eyeballs on the screen then. There are other things at play here. Now, you mentioned some record-breaking highs earlier. What were those about?
Oh, right. That was their experiences segment, which is basically their theme parks, resorts, and consumer products. And they did have a phenomenal year. Record-breaking revenue and operating income for the entire fiscal year.
Wow, that's amazing. People are still flocking to those parks and buying up all the Mickey years they can carry. But wait, didn't you also say there were some challenges in this segment?
Yeah, specifically in the fourth quarter, their experiences segment had a 6% dip in operating income, even though revenue actually ticked up a bit.
Hold on. So they made more money overall, but ended up with less profit. How does that work?
It all boils down to costs. The reason operating income took a dip was mainly because of higher expenses at their domestic parks, and also their international parks didn't perform quite as well.
So it sounds like rising costs are eating into their profits, even in a segment that's breaking revenue records. That's definitely something to watch. So with all this in mind, what's Disney's outlook for the future?
That's where things get really interesting. They're predicting some pretty ambitious growth targets, but they're also acknowledging the hurdles they're facing. We should
Hmm.
definitely dive into those details next.
Okay, so Disney's saying they expect growth, but they've got these challenges to deal with. Sounds like they're walking a bit of a tightrope here. So what's their plan? How are they going to navigate all of this?
Well, it looks like their strategy is really focused on playing to their strengths,
Hmm.
doubling down on their entertainment offerings, and especially their direct-to-consumer stuff. They're projecting double-digit growth in operating income for their entertainment segment in 2025. And a big chunk of that growth, they're saying, is going to happen in the first half of the year.
So they're kind of front-loading it, which makes it sound like they've got some big things planned right out of the gate. But hold on, didn't we just talk about how Disney Plus core subscribers might actually drop a bit? How does that fit in?
Yeah, that's where things get even more interesting. See, even though they're expecting that little dip in core subscribers, they're still forecasting a pretty big jump in operating income. About $875 million more for their entertainment DTC business compared to 2024. But, and there's always a but, right? This projection includes a comparison to a $200 million hit their India DTC business took in 2024.
Wait, back up. A $200 million hit in India, what happened there?
It's all because they lost the streaming rights for a major cricket league in India, and cricket's like a really big deal over there. So Disney plus Hotstar, that's their streaming service in India, it took a pretty big hit because of that.
Oh, wow. So basically they're comparing their projected 2025 performance to a year where they had this, major setback in India,
Yeah.
which explains why that increase looks so big on paper. But even with that context, they're still predicting significant growth. Are they just hoping to, make up for those losses, or is there something else driving their optimism?
Oh, it's definitely more than just making up for lost ground. They're expecting those Disney Plus core subscribers to keep growing in other markets, especially in the first half of 2025. But I think what's even more important here is their focus on making their existing streaming businesses more profitable. Remember, they already hit positive operating income in the fourth quarter, $321 million just from their streaming services combined. So now it's about building on that momentum.
Right, right. It's not just about getting more people to sign up. It's about making sure those subscribers are actually, worth something to the bottom line. How are they planning to do that?
Well, advertising is a big piece of the puzzle. Remember that 14% jump in DTC ad revenue we talked about? That means they're attracting advertisers, and that's a trend you can bet they're going to keep pushing.
So more ads on Disney Plus Whale. I'm not sure how happy subscribers are going to be about that. But from a business perspective, it makes sense. What about the content itself? Any big releases coming up that could, like, pull in new subscribers and keep those existing viewers hooked?
They didn't get into specifics about content in this report, but it's a pretty safe bet that they'll keep doing what they do best. Release a steady stream of new, exciting stuff. Think about the success of Inside Out 2 and Deadpool and Wolverine. They need to keep hitting those home runs if they want people to stay subscribed and keep coming back for more.
Yeah, those big blockbusters are definitely a key part of the Disney magic. But what about the areas where they're struggling, like with their sports segment? Are they ready to throw in the towel on ESPN? Or do they have a plan to turn things around?
They're definitely not abandoning sports altogether, but their approach is, well, more cautious, I guess you could say. They're projecting 13% operating income growth for sports in 2025, but that's on a reported basis. If you take out the impact of their India business, the whole cricket thing we talked about, operating income is actually expected to drop by about 10%.
Okay, so they're not shying away from the fact that sports is facing challenges,
Mhm.
especially internationally. So what's their strategy here? Are they going to cut costs, invest more, or maybe a little both?
The report doesn't really lay out specific actions, but their overall guidance suggests they're more focused on stabilizing the segment than on, like, aggressive growth. So they're probably looking at a combination of things, managing costs, making some strategic investments to improve profitability, but it doesn't sound like sports is going to be their main engine for growth anytime soon.
So playing it a little safer with sports, but still committed to it.
Got it.
Got it. Now, what about the experiences segment? They had a phenomenal year overall, but then there were those bumps in Q4. What's the outlook for the parks and resorts?
Yeah, for their experiences segment, they're projecting operating income growth between 6% and 8% for 2025. But what's interesting is they think this growth is going to be more backloaded, meaning it'll pick up more in the second half of the year.
Hmm. Why the slower start for the parks? Are they expecting fewer people to visit or something?
Actually, it's because of a couple of things that are going to impact Q1 performance. Hurricanes Helene and Milton caused some disruptions, and they're estimating that'll have a negative impact of about $130 million on operating income.
Wow, you don't often think about Mother Nature throwing a wrench in the works, but I guess it can happen. Even to a giant like Disney. What was the other factor?
Pre-launch costs for their Disney Cruise Line are estimated to be around $90 million in Q1.
So they're expanding their cruise line, which could be a good move in the long run, but those initial costs are going to hit their earnings in the short term.
Exactly. It's like short-term pain for potential long-term gain. But those are just temporary setbacks. Overall, they seem pretty confident about the future of their experiences segment. And they're still putting money into new attractions and experiences.
Right. So we've covered their strategies for entertainment, sports, and experiences. Anything else we should highlight from their guidance? Any other hints about what their master plan is?
I think their focus on long-term profitability is key, especially when it comes to streaming. They've set a specific target to reach a 10% operating margin for their entertainment SVOD DTC businesses, not including Hulu Live, by 2026.
So they're not just chasing after subscriber numbers, they're trying to make sure their streaming business is actually sustainable in the long run. That's a big deal, especially with all the losses we've seen from other streaming services. Shows they're thinking ahead, which is super important in an industry that's changing so fast.
Totally. They're not just playing the short game here. They're building a foundation for a future where streaming is a core part of their business and a major driver of profitability. But the big question is, can they actually pull it off?
That's the million-dollar question, isn't it? We've seen their successes, the challenges they're facing, and the plans they've got in place. But what does it all mean for Disney's future? Can they stay on top in the entertainment world with everything changing so rapidly?
Well, that's what we'll be exploring in the final part of our deep dive. Stay tuned.
Okay, so we've crunched the numbers, we've looked at the strategies, but the big question is still out there. Can Disney hold on to its crown, stay the king of the entertainment world, or are those cracks we saw, starting to get bigger?
Well, it's not a simple answer. Disney is still a powerhouse, for sure. You just have to look at those box office records, the way Disney Plus keeps growing, the fact that those parks are still so popular. It all shows that they know what they're doing. They know how to connect with people all over the world. But, like we've been talking about, they're facing some serious headwinds, the same as everyone else.
It's like they're juggling, right? Spinning all these plates at once.
Uh,
And some of them wobbling more than others.
mm-hmm.
You mentioned those record-breaking box office numbers,
Mm.
which is amazing.
Right.
But can they keep churning out those mega hits like Inside Out 2 and Deadpool and Wolverine? And what about the streaming wars? It feels like every time you turn around, there's another streaming service popping up.
Yeah, it's a tough business, no doubt about it. And even though Disney Plus is still a big player, that little dip they're predicting in their core subscribers, even if it's small, it shows that they're not invincible. Plus, they've got those rising costs to deal with across the board. Parks, sports, everything.
Right, and they're trying to thread that needle with their strategy,
Yeah.
doubling down on streaming, but also trying to squeeze more profits out of it, investing in the parks, but also dealing with higher expenses there. And then with sports, it seems like they're taking a more, I don't know, more cautious approach. It's a lot to manage.
Absolutely. And whether they succeed or not really comes down to execution. Can they pull it off? They've set some pretty big goals, like hitting that 10% operating margin for their entertainment SVOD DTC business by 2026. But getting there is going to require some serious balancing.
You know, I keep thinking about all those kids out there. And the adults, too. All those Disney fans who grew up with the movies, who have those memories of going to the parks. What does all this mean for them?
Well, I think the big takeaway here is that even giants can stumble. Disney is facing some real challenges. Their future is not guaranteed. But that's also what makes it so interesting. It reminds us that the entertainment world is always changing, and even the biggest players have to change with it if they want to survive.
It's almost like a real-life fairy tale, right? You've got heroes, villains, and a whole kingdom at stake.
Yeah,
But in this story, we don't know the ending yet.
exactly. We'll have to wait and see how it all plays out. But one thing's for sure. For Disney to succeed, they need to hold on to that magic, that connection with their audience. Keep telling those stories that people love and delivering those experiences that bring people joy. That's what really matters. That's what'll keep their kingdom strong.